Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with a couple of ending diagonals because I got multiple messages including screenshots to review some ending diagonals, and in this video I like to go over 3 of them and then talk about some other scenarios and things I like to say. Starting with the first ending diagonal here, where this 3-wave correction is a zigzag in a wave 4, and we're looking for a wave 1, 2, 3, 4, 5 ending diagonal. Most common target for wave 3 is between the 786 and the 886 trend-based fib extension taken from the low to the high of 1 to the low of wave 2, and the most common target for your wave 5 is taken from the low of 2 to the high of 3 to the low of wave 4. But the problem is what I wrote over here. In an ending diagonal, it's very important that all of the waves are part of the zigzag family, meaning 535 up, 535 down, or potentially a double or triple zigzag, but that is a little less common. Now, if we look for a zigzag, then wave C has to move either below or above wave A, and that is the problem in this wave 2. If you're looking at this being an ABC to the downside, and first of all, this has to be a 5-wave structure. It looks very 3-wavy in an ABC to the downside, as we have covered back in the day when price was over here, right? But also this wave C did not go below this low if you count this as an ABC, which then invalidates this ending diagonal over here. If we look at the second ending diagonal, we have the same zigzag in then a wave 4, but now your wave 2 moved to the left side. So we have a wave 1, 2, 3, wave 3, 4, and now we're looking for a wave 5, which also then has to be a zigzag structure. Potentially your first wave A is then finished, looking for a move to the downside in a B, and then another C to the upside to finish your wave 5. The issue in this particular scenario is the length in time of this wave 3. This wave 3 is incredibly long compared to your wave 1 over here. Wave 3 is 6.5 times longer than wave 1, which is not really something that you like to see, as preferably wave 1 would actually be the biggest wave in an ending diagonal, as usually in an ending diagonal you're going to then see 1, 2, and then 3, 4, 5 before then a bigger drop, where preferably your wave 3 is going to be a bit shorter in time and price than 1, your wave 4 a bit shorter in time and price compared to 2, and then your wave 5 being a little bit shorter in time and price again compared to your wave 3. Those are not hard rules per se, it's more like guidelines, things that you prefer to see. So the fact that wave 3 is so long does lower the probabilities of this scenario. What is nice, however, or at least better compared to the previous one, is that this is now an ABC, where this wave B can indeed be a 3-wave structure, which is the way that we counted this move to the downside back in the day. The problem is though that this has to be a 5-wave structure. This is incredibly messy, so you have to somehow count this as a 1, 2, 3, 4, 5. Isn't great, but that's not really what is bothering this scenario. It's mainly the length of your wave 3 here. And then finally we have this ending a diagonal, where we have your wave 4 ending in a triangle. This is the low of your wave 4, and you're going to be looking for an ending diagonal to the right. Now, first of all, it is very, very early to call this diagonal at the moment, as only your wave 2 is in and you don't even have a wave 3. Usually I would only look for diagonals once you have a wave 4 in and finished. And also this wave 1 has to be a zigzag. Now once we count this move to the upside, we can count a 1, 2, 3, 4, 5-wave structure to the upside. It has to be a zigzag, so it has to be an ABC correction and then another ABC, but this being an ABC does not count very nicely. It counts better as a 5-wave structure, meaning that the probabilities are higher for this move to the upside to be a 5-waver, not a 3-waver, lowering the probabilities of this ending diagonal as well. Besides, it's very, very early to call, and wave 3 still needs to be a zigzag. We currently have over here then a 5-wave structure in a wave A. You still want a B and a C, ending preferably around this target area, right, of a wave 3. Now if we go to the bullish scenario that I keep an eye on over here, then we did end a wave 4 over here, and we're looking for an impulsive structure to the upside. So in this particular scenario, we then have your wave 1 being an impulse, wave 2 double zigzag in a WXY, working on a wave 3. If we're looking for a wave 3, then usually the minimum target for wave 3 is the 1.618 trend-based fib extension taken from the low to the high of 1 to the low of wave 2, sitting at 41.2k, but you know, at least a minimum target is that a wave 3 is not allowed to be shorter than either wave 1 or wave 5. It's simply not allowed to be the shortest wave in an impulse. So if wave 3 can at least pass the 1-to-1 at 39.5k, then that rule is respected. But usually the 1.618 is a target for wave 3, which means that we do want to see price moving to the upside and volume moving with price to the upside as well. Of course, everything goes in waves, right? We could have over here a 1-2, then another 1-2 and continuation, but we have to wait and see how price reacts after it just took this high over here. Now, if we look at the bearish scenario, this has now lowered in probabilities, mainly because over here for B, we want to see a 3-wave structure, but now it became a more like 5-wave structure. And if we look at this scenario in a whole, you have a WXY, where in Y we were then looking for a flat structure, 3-wave A, double zigzag, and then you want to see a 3-wave structure in wave B. The problem is this was a potential 3-wave structure, and then you want to see continuation to the downside, but price now took the high, so this is not a wave C anymore, as of course a wave 2 is not allowed to take the high of wave 1, so it really lowers the probabilities that any structure here currently is a wave B, because for a wave B, this needs to be your A, you need a very deep wave B and then a wave C, and likely go to the expanding flat targets. But yeah, it does lower probabilities. The fact that you took the high here, you already have 5 waves in, and you already at the 1-to-1, preferably for a wave B in an expanding or regular flat. You have like an A, B, and your wave C is going to be the wave that is going to enter this target area over here. So it is something we of course continue to observe. If price wants to drop to the downside, it can be a potential wave B, but we still expect a move to the upside for a wave C, because at the moment this does not look and cannot be a finished wave B structure, because it's not a 3-waver at the moment. Now if we then look at the CVD divergences more locally, then the bullish CVD divergences here already played out. Price moved down, bullish CVD, target was the high. Bearish CVD divergences got invalidated. And what is important, as always, is observing the reaction. So we did have some bearish CVD over here, but once price started ranging, I noticed some bullish CVD divergences over here building, which I'll show in a second, causing a bit of a push to the upside, and eventually price taking the high, invalidating bearish CVD divergences that we have over here. Another thing that is important is that price hit the 886 that I showed in a previous video as well, like the higher time frame 886 that was taken from this high to the low, but eventually more locally, price also here hit the 886, rejected, moved towards the golden pocket, which is very common after hitting an 886, moving to the golden pocket, look for potential support, and then we move to the upside to then wick the high over here. And that is of course where we are at the moment, with a little bit of a swing failure pattern and a move to the downside. If I show you what I meant on the 3-minute time frame, then this was the area where I saw bullish CVD divergences. It's very, very low time frame, 3-minute stuff, right? But if you keep an eye on the blue line over here, you can see we have a higher low, right? Higher lows building on the 3-minute in that range. But we also had a lower low on blue. Look at the right side. This blue part of the, or this part of the blue line is lower than where I am now with my cursor, right? So we have higher low in price, lower low on the CVD, bullish CVD divergence for then a push to the upside, which eventually resulted in what we see over here. Now, if we then finally look at the probabilities of the different scenarios, then what we are looking for over here is price to still move towards the upside, both on the medium time frame as well as on the low time frame. We have the target box over here, which, oh my, we still did not touch. I can't believe 38.5k to 39k, where we have that very important point of control at 38.7, and we have the weekly naked point of control at 39k, right? Very important levels. But in general, even if price moves to the downside, in the bullish scenario, we could have over here a 1-2, 1-2 move down, as we could count this as a potential finished 5-wave structure to the upside, expecting a retracement in another 2 for then a potential move to the upside in a wave 3, right? That is the most bullish scenario for bullish continuation, where even in the bearish scenario, which currently still has a bit of a lower probability, but even here, you're looking for a wave B, which has to be a 3-wave structure, where this is then your A, going to be looking for B, and then a wave C to the downside. Now both of these scenarios are invalidated in case price is going to move below this low over here, right? The moment price moves below this low, we're going to think about different scenarios as well, as I got some in mind. But yeah, at the moment, having a bit of retracement is no problem. 1, 2, 3, 4, 5, bit of retracement, and probabilities are then higher to still move to the upside to higher prices. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.